Welcome to Markets Now. I'm Michelle Rook along with Scott Barlick with Koima Barlick. We are seeing the grains try to come back to positive territory here after some weakness on the opening and the livestock futures. Live cattle are mixed, and as far as the feeders, we're back to the plus side there, but hogs are lower. And Scott, let's talk about grains first. We did start lower, as I mentioned, but we've come back here. I don't know if we hit some support areas or if we reverse just because the outside markets kind of strengthened up and spilled over.
Yeah, it's not really bouncing off of a major support here, but seeing a little bit of a bounce and getting it back to the top side of the range for corn, top side of the range for beans. So they're just not ready to completely roll over yet. The basis hangs on strong, so it still has that story to keep it at some of these levels. It just hasn't had the news to punch it through and get a bunch of funds behind it and a bunch of push behind it. Just because the future's telling us, hey, we've got bigger production in South America this year. We're going to have big production here. We're just sitting here in January, kind of in this no man's land time frame for our crop. So it's having an easy time getting back to the top of the range. I'm a little bit impressed by that it continues to have that strength to at least get back to those levels. But I still think we're in a market that's going to sit here and spin around with no major ups and downs. I think it's pretty content where it's at, being underneath where the cash is at, with kind of the future, and it's in the back of its head saying we're going to have some more numbers. So we're going to have to see a big shift in the dollar. Maybe it's the outside markets, the energies would need to spike up to kind of give it something to really go back onto, I guess, to push it through to that next level.
Yeah, we need a catalyst to get above resistance, really, in both corn and soybeans, and we've kind of hit those areas here today. All right, let's talk about this cattle market. Live cattle, new contract highs in the April all the way through the back of the board yesterday. So is that cash strength? Is that gearing up for this report, this inventory report this afternoon?
Yeah, let's talk about these cattle and some contract highs. Absolutely. I'm glad
you're not
you asked.
pulled up or anything.
I'm glad you asked. So always happier when that market's going up as a producer myself. So it's got some pretty good strength. And we've got cattle inventory report at 2:00, the biannual USDA numbers, where we're going to look at what the cow herd size is, cows and heifers, beef cows, beef heifer replacements. So those estimates are all looking to be pretty friendly. That's what we're.
In fact, could be some record lows, actually, couldn't they?
And us cowboys have been kind of chirping about this all along, that this cow herd is shrinking and the money's not making it down to the cow-calf producer. It's not making it into the feed yards, and it's just starting to show up. This is what the report's really looking at, is how much we've shrunk some of these numbers down and how tight of a supply we are. And yesterday, you start a Monday with a big up day, 5,000 increase in the open interest, big volume on the day. I think when you start to see these numbers in print, you start to say, hey, maybe some of these cowboys are right that we are getting that tight. So able to push through some of those into contract highs ahead of the report. And today, Tuesday, the day after that, holding on pretty well. Actually was higher for part of the day, only a couple of contracts lower. The feeders are up nicely. So It looks like that interest is still there to keep the cattle higher. And the big volume I mentioned, it's apparent when you're trying to do larger sized orders in the market. It's soaking them up very easy. I alluded to it today. It feels like the old days, about 10 years ago, when you used to be able to do that and all the volume was there. So tremendous amount of interest in the cattle market, and it's holding on very nicely.
Right. The other key we're going to need, in addition to confirmation of these tight numbers in the inventory report, is cash trade was higher last week, surprisingly, in the South by $1. We're going to need that to be higher again this week. What's your call there?
Excellent point. That's going to be that is going to matter a little bit, because we started the week with poor northern cash, and it was Thursday, and our heads were hanging a little bit, and this is feeling a little sluggish. These cash prices are not good. They're significantly lower for the north. And then we finished with the higher cash in the south, that little shot in the arm there. So that's a great sign that the south is getting the cash, getting 156 on straight up Brahmas. a lot different than what we have in the north. So they're able to get that done. It also says, hey, we start delivery process next week. And if the cash in the south is doing pretty well, they're getting cattle cleaned up. We don't have to maybe worry about the deliveries on a Feb contract, that little hiccup there. We just need the north to catch back up. That's the one thing to me that would dampen this parade just a little bit, is if all of a sudden we have that poor cash continue through in the north as we still struggle. The cash negotiators are still having a tougher time getting cattle moved at decent prices comparative to what the south is anyway. So that's what it's going to rely on. We need to see a lot more interest in the north trying to get some of these cattle. And now that we've had some of these winter storms behind us that pulled a lot of weight off, maybe some of the guys that were just trying to clean up cattle, just trying to get them gone because the winter just keeps on giving us winter this year. Maybe something of that's getting behind us and we start to see a little bit more of an open forecast, maybe not warm yet. Maybe it gives us the ability to try to hang on to some of these cattle, at least to try to get a better price. But we still have cash corn at $7.30, $7.50 at some of these areas in the north. So it is going to probably, continue to keep us a little bit current, but ultimately I don't think that the numbers are there, that we're not going to be overrun with them. So we should be able to get some higher prices. I think it's time to stand up and try to ask for them. Whether we get it or not, I think I'm sure going to try.
And speaking of cash trade is still a little sloppy in terms of the hog market. We did see kind of the market try to build off of reversals from last Thursday, but we're a little bit too far ahead of the index yet here, aren't we?
Yeah, we've got some bottom pickers, to be honest with you. It looks to me on the futures, you get a market that breaks that sharp and that fast. And when you see that trend shift, there's a lot of people trying to get in on the low side, trying to buy it and see if it sticks. And that's usually tough to pick a bottom, because then the cash maybe doesn't react necessarily enough to try to reward what those futures just tried to do to turn around. And so you see a little bit of a drift lower again until we can get a little bit more confident push in that, cash market. And we're talking about cash hogs like it's a, highly traded thing. It's a very thinly traded kind of number to look at. So it's a little bit dicey to kind of say that we need to be tied to cash on the hogs, but it has had a pretty good break. We feel like we're getting some of these weights under control, and we're going to come into a little bit tighter supply, speaking just coming out of that December, January timeframe. So seasonally, you should see some tighter numbers here, and it's going to have to kind of start to show some fundamental proof before these contracts want to turn around on the futures market.
And the funds are short now, so they probably need a reason to cover some of those shorts here. At least maybe they're done selling for the time being, hopefully.
Yeah, let's try to give them a reason, I guess. There's a big enough paddle for everybody's butt. So even
okay. All right, thanks. Always a pleasure. Thanks so much, Scott Barlick with Quema Varlick here on Markets Now.